Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman. He's a portfolio manager at PI Financial in Vancouver. His website, pifinancial.com. Welcome to the show, Drew.
Thanks for having me on.
Drew, just to start off with, because you're a new guest, could you give us a bit of your background, what you've done, where you're going, and where you plan to go?
Well, Jim, I'm a derivatives portfolio manager at PI Financial. I co-founded the Polar Futures Group here with Victor Adair. We run an investment advisory service in the futures and options market, as well as managing separately managed accounts in the futures and options space as well.
Drew, taking a look at the markets right now, what kind of time frame do you view the markets? Are you a day trader, or do you take long-term positions?
Well, I view the markets in both. I have a longer-term view of what I think is going on in the market. I create what I call themes. Those tend to be longer time periods. For me, that would be 6 months to a year. These themes tend to be the kind of general background to a lot of my trading. I don't want to be trading against my themes. So an example of that would be the U.S. dollar. I think it's very powerful in a lot of the markets that we trade. So if I have a theme that the U.S. dollar is going up, I would most likely want to be short other things against the U.S. dollar. If I think the U.S. dollar is going to be moving lower over a broader period of time, I'd like to be long other assets. So that's the longer term theme that I create in my trading. But then I will trade on a shorter term basis, or a shorter to medium term, which for me short term would be, multi-day, just 1, 2, 3 days, quick sort of momentum trades. And then for me a medium term is sort of my 3 week to 2 to 3 month kind of time period that I'll trade in as well. And a lot of the time I will use the options market to express that. But again, looking at the longer term theme of a market and then breaking it down into the shorter time periods that I actually want to execute my trades.
Can you explain in detail the difference between a data point move and a market shift?
Yeah, that's something I really look at closely. I mean, we're always getting a barrage of new information, whether it's economic data, whether it's central bank speakers. It can even be natural disasters, that sort of thing, that will affect a market. So I try and break it down into two different categories. One being a data point. That can be a specific economic number that comes out that will move markets that day, but over a longer time period, not separate that big of a trade. Whereas the market shift, I think, is when we see a bigger change happen in the markets. And I'll give you an example of that using the Canadian dollar. We had one recently with Wilkins at the beginning of June come out and sort of change our view on what the Bank of Canada was thinking. She was backed up a week later by Governor Poloz, and that view change in the Bank of Canada was what I would call a shift in the market. So the market had been very bearish, the Canadian dollar. There was a lot of things that were going wrong with Canada, NAFTA, with the Home Capital Group issue going on. But this theme change or shift in the market brought about a 14% rally in the Canadian dollar in only a few short months. So it's those sort of bigger theme changes that shift the market that I want to be aware of and try and be on side with, rather than the smaller data points if I'm with a position and a data point goes against me, I would likely want to try and ride that out.
We'll have more with Drew Zimmerman right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, will the appointment of a new U.S. Fed chair be a data point or a market shift?
Again, going back to my previous example, I think given how important the central banks have become in our daily lives in the financial markets, I think we would be looking at a shift. But again, that would depend on which candidate gets selected. If it was somebody or even is Janet Yellen, then maybe it's not a shift. It's just a continuation of what we have. If it's Warsh, who is a front runner, he's seen to be more hawkish. Maybe that tilts the Fed to be more hawkish. Again, shifting the markets for a longer period of time to a hawkish stance. If it comes out as Powell, he's thought to be more dovish. Maybe the market goes the other way for a sustained period. But I think whatever we get, and we can never know what we're going to get, so we just have to kind of sit and be ready, but ready to acknowledge that event could bring about a shift in the markets.
What impact does central bank policy have on specific markets, for example, currency markets or the gold market?
I watch central bank policy closely in that it is a huge driver of interest rates. For me, when I look at currency markets, one of my fundamental drivers of the currency market are your interest rate differentials. It's a clear one versus the other. If I can get an extra 100 basis points for investing my money in U.S. bonds and Canadian bonds, I'm likely going to do that. The flow of money goes into the U.S. dollar. U.S. dollar does better. So when I look at currencies, it's that interest rate differential that on the short end gets set by the central banks that I watch closely. And again, with the precious metals, I will watch how, especially gold, how the real rate affects gold. So those two obviously have an inverse relationship. So if the Fed is going to be moving rates faster than inflation, and right now we have very little inflation, and if the short-term rates are moving higher, real rates are moving higher, that's going to be a headwind for gold. So if you combine that with the currency aspect, you get a stronger U.S. dollar, you get higher real rates. Both of those are going to be a headwind for gold. Not a good environment for gold to be doing better. But again, we're not trading in a vacuum. These things don't happen all on their own. You can't just say, short-term rates going higher means this happens or this happens. There's always a lot of different influences going on, but a confluence of those events will kind of shape my view of what I think is going on.
Given we're not trading in a singular market, what's the key market for you to keep your eye on, and what is the big market in your opinion?
Again, I would come back to the U.S. dollar. I just think the U.S. dollar is key to a lot of the markets I look at. That's going to be currency markets, commodity markets, the precious metals. It is the denominator in a lot of those markets. So it tends to have a big impact when it's having a broad move. Day to day, there may be some mix up in the correlations. That's fine. But if the U.S. dollar is broadly strengthening over the course of, say, the last month, the Canadian dollar is going lower, the euro is going lower, the Aussie is going lower, gold's going lower, interest rates going higher, bonds going lower as well. So, well, it is, in my view, a spin-off of what's happening in the interest rate market. The U.S. dollar is very key, but I definitely do watch the interest rate market again to feed into that dollar view.
With so many commodities traded in U.S. dollars, oil, gold, silver, and so on, do you ever see the Chinese yuan or some other currency ever replacing it as the world's standard currency?
It's very possible. There's a lot more talk and a lot more stabilization in the yuan that's happening. Obviously, with the one road policy that they have going on, they want to establish better trade efforts. The U.S. dollar has been so dominant, it almost maintains that dominance just on a self-fulfilling sort of prophecy, just because it is part of every not every transaction, but most transactions. I would never say never, but I don't think it happens quickly, but I would never say never.
We'll have more with Drew Zimmerman right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Drew Zimmerman. Drew, what is the one thing that tells you it's time to step into a trade?
There's never one thing. I always look for a confluence of things. There can be one specific event that is a tipping point, say, that pushes me into it, but I'm already watching that particular market for a trade. To give you an outline, I can use the gold market. This past sell-off that we've seen from the 1365 high over the last few weeks, we've turned lower. I was watching that as we were moving higher. We had the geopolitical tensions with North Korea bubbling up, which is a good driver for gold. We had interest rates moving lower, which helped gold. We also had speculative positions starting to build up in gold as well. So to me, I was watching that run up, and the momentum in the market kind of continued to build and build and build. I didn't want to step in front of that. But after the market turned lower on a Thursday, we had the North Koreans talking about launching another missile overnight Thursday, and that's when we hit the 1365 high. Friday, they did. They launched the missile over Japan, and it closed Friday on its lows. It gapped open lower on the Monday. It bounced back a little bit on Tuesday, and for me, that was a perfect entry point on a short trade, because we'd had all these events that were supposed to be taking gold higher. We got that event, which should have been bullish for gold, and it closed the week very poorly and gapped lower on the Monday. For me, that right there, that was the final straw to get into a trade on gold.
What trades do you have on now or are looking at to enter?
As I just mentioned, I'm still with the gold trade, still looking for that to move a little lower. I've had a 1260, 1250 sort of price target on the downside. Again, always monitoring those things closely. I did the same sort of thing with Canada as we had a turn at the beginning of September. Same sort of things where we had a confluence of issues working against Canada as it got to 83 cents. I think it had gone too far, too fast. The one that I'm looking at right now, and actually just started taking some positions in today, is the crude market. Very similarly, we've had a good move to the upside. It's moved back to $53 a barrel. That was the recent high. I still believe that there's a fundamental oversupply of crude, that the U.S. crude producers can really step into this market. But again, that was just one thing. We've had prices build up. We've had momentum running high. And then this past week, we've got more bullish inventory data out of crude. We had the OPEC group today talking about extending their cuts or even increasing the size of the cuts. And on that news today, oil had been up, turned lower, and broke below $50. So again, when we get events that are supposed to be bullish of a market, the price has already shown me that it's starting to roll over, and then we go and move to some new lows on what should have been bullish information. I'm happy to start stepping into a position there.
U.S. oil inventory saw a 6 million barrel drawdown last week, opposed to a 500,000 drawdown estimated. Is that because all the refineries that had to slow down or shut down due to the hurricanes are now back up online and producing gasoline?
Yeah, the data that we're getting is very mixed because of Hurricane Harvey. Obviously, it really screwed things up with the export numbers, with the refinery numbers. And at first we had, as you were saying, a huge build in oil inventories, just as the refiners couldn't take that oil in. They're now taking the oil in to refine and turn the oil into gasoline, which was desperately needed after both the hurricanes. So it's still hard to find out where that equilibrium is, and as the refiners are doing what they can, but obviously still drawing more on the inventories than maybe we would have thought. And again, it is that number that should have been bullish, even though we had a small build in the gasoline inventories. It's that big draw on crude that should have been sending the market higher, and when it wasn't able to do that, that's when I looked to get on the short side.
Drew, how can people find out more about PI Financial and the Polar Futures Group?
The best place to find us is polarfuturesgroup.com. You'll find a little bit about us and our email on there. And as always, please feel free to send me an email.
Drew, thanks a lot for chatting with us.
Thanks for having me on, Jim.
My guest has been Drew Zimmerman. He's a portfolio manager at PI Financial in Vancouver. His website's PIFinancial.com and PolarFuturesGroup.com. You're listening to HowStreet.com radio. Questions for the guests or ourselves can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.